Hey guys, what's up? It's Josh here. Super excited to talk to you guys today and make this video. We're gonna go over exactly what you need to do during this time of an economic downturn. It's officially classified as a recession, and it could get worse or it could get better. Nobody really knows right now, and it's very hard to predict what the winter's gonna look like with the rising cases and shattering records every day. So I hope you guys will follow my tips and advice. If you find them interesting, please remember to hit that subscribe button down below and check out the link below so you can get 2 free stocks with Webull when you deposit $100. Let's get into it. Alright, so in a time of crisis or when, there's a lot of uncertainty, you want to make sure that you are preparing yourself in the event that you lose your job or something bad happens and you have to survive on however much money you have. You need to know what that amount is and you need to know how to make it last. And what I am proposing is zero-based budgeting. Every penny that comes into your bank account, you know what it's going to be used for. And now you're probably like, well, what do I do? Because I usually put a couple $100s into my savings account monthly. So that's not really a bill, right? Well, I am proposing if you use zero-based budgeting, you make it a bill. Whatever amount that you can afford to put into a savings account monthly, treat it as a bill. It's not an optional thing. It has to go into that savings account monthly regardless. So you're not just out spending money on like a frappe at Starbucks or something if you don't have that money to spend. And if you do that, you're going to be able to build up a savings account, and in the event that you lose your job or your income is drastically reduced, you're gonna have some money in that account that you can rely on if you need it. And if you don't need it, that's great. Just keep building that money up, because eventually you can kind of look at, a high yield savings account, or maybe, you want to purchase an investment property. You have money in an account that you can do that if you're not faced with negative circumstances which prevent you, from saving that up even more. Now, let's say that you earn $2,000 a month. These are just random numbers I'm throwing out there. And, you are on unemployment, you've lost your job, you get $2,000 a month through unemployment, or you're working your regular job and you make $2,000 a month. Things are kind of tight right now. You're really uncertain about what's going to happen. The thing that you need to do first is look at all of your expenses and say, what can I cut out or what can I reduce so that I can save more money and get more of a cash reserve in my savings account? That's the first thing. Maybe, you quit your gym membership and you run outside for the rest of the summer. Or maybe, instead of going to Starbucks 5 times a week, you go 1 time a week and you save the extra money that you normally would have spent on that. You want to preserve and you want to cut down on your expenses so that you can keep more money in your account. Cash is liquidity, and liquidity means that you can easily access your money and use that in the event that you need to. If something, you can't get a refund on the Starbucks that's in your tummy because you drank the drink last week, but now you have to pay your rent. So you really need to think about this beforehand, before negative circumstances hit you and then you don't have anything to rely on. Now, if you make $3,000 a month, $2,000 a month, whatever you want to make, let's say 3, just for the ease of the explanation. $1,000 of that, you have to go to rent. Another $1,000 you're going to pay for your car insurance, your car payment, insurance, gas, groceries, maybe daycare expenses, all of that stuff. And then you have $1,000 left over. Well, if you want to put the $1,000 into your savings account, that would be a bill. So at the end of the day, you have $0 that you don't have allotted and you know where it's going. If you have money left over, then that's not zero-based budgeting, and that's a problem because you don't want that money just staying in your account and you're like, oh, I have like $500 left over, because then you're gonna go spend it. You're gonna go to Target, you're gonna go to the mall, or you're gonna shop online and you're gonna say, oh, I have $500 here, what can I do with it? If you were to put that money in a savings account and you save it and you make a conscious effort to build that account up in case of a rainy day emergency, you already know I don't have this money to spend, I need to cut back this week, and I'm only going to spend the base amount that I can afford to get by on. Alright, so let's prepare for a worst case scenario. You just bought a house or a condo or a townhome, you lost your job, you're on unemployment, things are really tight right now, you're having trouble making ends meet. What do? Because you don't want to miss your house payment and risk foreclosure. You have a lot of issues, you can't afford to feed your family. Here's what you do. The CARES Act gives you the ability for any federally backed loan. Now this can be an FHA, VA loan, USDA, Freddie Mac, and Fannie Mae loan. You can actually call your loan service provider and request up to a 180-day loan forbearance. And after that 180 days is up, you actually have the ability to go ahead and request an additional 180 days. Now, if I were you, I would take advantage of this. I do want to say that a lot of loan service providers have really done a number on people's credit. You need to make sure that when you do this, they do not put a negative remark on your credit report. Now, this is very important. If you have loan forbearance on your credit report, the company could actually report it as delinquent. You need to make sure that they do not put a remark like that on your account, and if they do, you need to call them and explain to them that you are not delinquent, you're in mortgage forbearance. And it should have, it's probably gonna have some effect on your credit, but it's not going to have, like a 50-point drop or something. And that's when you really need to worry about it. Now, a lot of the loan service providers were doing this earlier in April when people were calling them in a panic, and they have corrected a lot of the issues, but that's something that you need to watch out for and you really need to be careful of. Now, you're probably wondering, like, oh my God, what are the qualifications for doing this? I'm gonna have to call and be on the phone. Well, the CARES Act actually explicitly states that all you have to do is call them and tell them that you are experiencing hardship, financial hardship due to the pandemic. You don't have to provide any documentation or anything like that. The thing to remember is don't let them push you around. You as a consumer have the ability to really stand up for yourself. The CARES Act gave you that right, and really you didn't even need the CARES Act. As a consumer, you need to remember that you are the person in charge. Call, and if somebody doesn't work with you, go to another level. And if you have to, get the Consumer Finance Protection Bureau involved. I know that they've been very busy throughout this whole thing and they've experienced a lot of complaints. I think that loan service providers are actually working a lot harder right now to make sure that they're actually doing the right thing. But please remember that you as the consumer have a right to question things, and you want to know exactly what is going to happen when you do this loan forbearance and how it's going to affect you. Now, when you do this, it's very important to figure out exactly how the loan forbearance is going to work. You need to know, A, are you going to pay back all of the amount that is in forbearance, when it comes current again? Are you going to divide that amount up into payments? Are you going to add it to the end of the loan term? Exactly how is it gonna work? And you don't wanna sign anything before you read every line on that paper and fully understand how it's going to be paid back. One thing that a lot of loan service providers have done to people is say, okay, we're gonna give you the 180 days, but at the end of the 180 days, you're gonna owe that amount plus interest immediately. And that's just not acceptable right now, because if you're in mortgage loan forbearance, where are you gonna get the money to pay a lump sum of God knows how much money all of a sudden at the end of this? So please, please, please pay attention. Please pay attention to what exactly it is you're signing. Look at the details, figure out everything that you need to know before you sign anything. Now, I do want to state that the CARES Act applies to anyone who was current as of January 31st, 2020. If your loan was delinquent before that date, it's not really going to help you that much. It's still going to show delinquent on your credit report, and you might be able to call your loan service provider and work something out. In the event that, it affects you after January 31st, 2020, you have a lot of rights. And so if your loan is delinquent right now and you go into an agreement, it's probably going to show delinquent on your credit report. However, if you are current, you're still current, but you went into mortgage loan forbearance, they can't report a negative remark on your credit report. So you need to call them, explain the situation, and ask them to remove that from your credit reports. Now, an important part of protecting your credit is to actually know what your credit score is. What do all three credit reporting bureaus say about you? Does it show delinquent on one and current on the other? Well, that's an issue and you need to get that fixed. Now, you can pull a full credit report and look at any remarks, positive or negative, and look at those by going to annualcreditreport.com. Now, this is free, it's backed by the federal government. You need to be really careful when you're pulling your report on other websites that are not associated with the government, because you don't want someone to steal your information. I will link this website down below, but you have the right once a year to go pull all three credit reports, Experian, TransUnion, and Equifax, once a year and look at those. Now, if you see something negative on there, the first step that you would need to do is call the company who put the negative remarks on there and ask them to remove it. If they don't, take it to the next level, explain your situation, figure out why they actually put that negative remark on your credit report, and then if it's not removed, you might need to take other action as long as you can justify that action. And lastly, I want to talk about, okay, that's your mortgage, but also what do you do about your car payment and, all of your credit card bills, things like that. Well, a lot of companies are actually working with people right now. In fact, I wanted to have as much knowledge as I could to produce this video. So I actually called PNC, which is where my car loan is at, to ask, what happens if I actually need to defer this loan. Now, I didn't do it, so I don't know exactly, all the steps that lead to it, but I do know that they said it wasn't a big deal. All I had to do was say I'm experiencing financial hardship, and it would not be reported on my credit report as delinquent or anything negative and count against me. They also stated that they would just add the payments to the end of the loan, so that way all of a sudden if you defer it for 3 months, you don't have to come up with however much it is at the end of the 3 months. Now, one thing that was important to note that they told me, and I'm sure this is the same with pretty much any lender, is that interest will still accrue while you go into forbearance. So you still will be responsible for that forbearance, but if you can't afford the car loan at the time and you have money coming down the road, it's probably not going to be a big issue. You're probably going to pay $50 in interest, but it's better than going delinquent on your car note and getting it repossessed or facing some sort of other disaster where your credit is impacted and you have trouble getting a loan in the future. In addition, credit card companies are really working with people right now. If you call them, explain your situation, tell them what's going on, and they will work with you. The important thing here is communication, communication, communication. Always, 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 if you cannot make a bill, then you need to call that company, explain the situation, and ask for some sort of help or relief. And when you're doing that, you need to know how that is going to play out. As I stated before, you don't want to be responsible for like $900 all of a sudden because you haven't paid your car payment for 3 months. You need to figure out what the terms of repayment are. You need to have that documented somehow, whether they send you a letter and you have to sign it, or whether they just send you a letter stating the terms. You need to know exactly what's going to happen in the future and how it's going to affect you. All in all, I think the important thing to remember here is to communicate with people where you have debt if you're not able to make those notes. Now, I know we spoke about zero-based budgeting in the beginning. I would encourage anybody right now to do this because I myself am focused on preserving cash and putting as much into savings as possible because you never know what's gonna happen. The economy is looking kind of weird right now. We have a lot of very high stock market numbers. People are saving more than ever. We have, a crazy undetermined amount of people going out and buying things. Consumers are spending more, but we don't know how much longer that's gonna last. So it's just important to have as much in a cash reserve as possible. All right, guys, and that wraps us up. Please remember, if you have any problems or you feel like you're being treated unfairly, stand up for yourself, know exactly what's going on, know all the details. If you have to, raise it up to the Consumer Finance Protection Bureau. You have rights right now, and you don't need to be stressed out about something that's out of your control and that can easily be fixed with a phone call or an email. If you can't get in touch with somebody right away, please try again. Don't give up, because when you just sit back and let things happen, that's when you impact your credit score. That's when you go into circumstances that, might be out of your control. It's always better to be proactive than reactive. As I said, I'm gonna link all of this stuff below. You can find out where to check your credit reports, Consumer Finance Protection Bureau, and then I'm also going to link something about zero-based budgeting so you can try that method out. It's always really nice at the beginning of the month, when you know how much money is coming in, to sit down, know how much is going out the door, and have a place for every dollar. Once again, thanks for liking. Please remember to subscribe, and I will see you guys soon.